Hello students, I am Dr. Manish Puntambekar from the Department of Management, the Bhopal School of Social Sciences. In last lecture, we had discussed about the basic concepts of bank reconciliation statement, how to prepare, what are the objectives of preparing bank reconciliation statement. Also, we had discussed some numerical questions. Today, we are just going to start some discussions regarding numerical questions. In previous lecture, we had discussed about the balances of that is called favorable or unfavorable balances from the point of view of cash book, and today we are just going to understand the balances here in the first case number 1 when opening balance is credit, that is favorable balance as per bank statement or bank passbook. It means amount or money is laying deposited in the bank account and we have positive balance in our bank, therefore it is called favorable balance. So according to this favorable balance, we will try to understand one of the questions, that is illustration number 1. On 31st March 2018, bank statement of Dinesh showed credit balance of rupees 15,650, whereas cash book shows debit balance of rupees 15,200. So both these balances are already given in this question. Here credit balance worth rupees 15,650 and debit balance worth rupees 15,200 is given, and both the balances are from the point of view of here bank passbook or statement of bank, right? Here some of the differences which are already given in the questions between the balances of this passbook. The first reason is checks issued to Mr. Roshan for rupees 6,000 and to Dinesh for rupees 3,840 were not presented for payment. Second, bank charge rupees 350 as bank charges. Third reason, it is Nitesh directly deposited rupees 8,160 rupees into the bank account of Dinesh, which has not entered in the cash book. So these are the 3 reasons. Now fourth reason is 2 checks, one from Mr. Sham for rupees 5,150 and another from Mr. Kailash for rupees 12,500 were collected by bank in the first week of April 2018, although they were banked on 25th March 2018. And last reason, interest credited by the bank rupees 450. So we have been asked to prepare this bank reconciliation statement on the basis of these facts. Now students, we will try to understand this question. Here under this bank reconciliation statement, particulars, amount in details and total net amounts have been shown in this bank reconciliation statement. As far as this balance is given, here balance as per bank statement, that is credit balance, which is also called favorable balance of this passbook. So according to this question, the bank balance has been shown worth rupees 15,650 rupees over here, that is the positive balance. Then here Mr. Sham, Mr. Kailash, actually these checks have been deposited in the bank but not yet collected. It means here Mr. Sham and Mr. Kailash are one of the debtors of us, and we have received here 5,150 and 12,500 rupees worth of checks from both the parties. But actually we have deposited these checks in the bank, but unfortunately both these checks have not been collected so far. It means these checks have been dishonored by the bank. Once we received these checks from both the parties, that is Sham and Mr. Kailash, we must have increased our cash book proportionately, but these checks have not been deposited. Actually these checks have been deposited but have not been collected by the bank. Therefore this amount has not been recorded in the bank account. Second, Bank charges debited by bank, it means bank is just going to debit the amount of rupees this 350 as bank charges directly from our passbook, but this information has not been sent by bank to us. Therefore, we don't know whether bank has deducted this 350 rupees from our passbook. So, we did not record this 350 rupees in our cash book. So, ultimately, total 18,000 rupees will be debited in this balance which has been shown as far as this bank statement is concerned, that is the favorable balance. Now, next, here checks issued but not yet presented for payment. It means we have issued these checks to our creditors, but actually these checks worth rupees 6,000 and worth rupees 3,840 respectively have been issued to Mr. Roshan and Mr. Daniel, one of the creditors of us. So we have issued both these checks to both the parties, and we have also debited all these from our cash book, but actually these checks have not been deducted or paid from our passbook, and total passbook has wrongly been increased by rupees 9,840. Therefore, this amount has to be deducted from passbook, that is called bank statement also, so that we can just reconcile this bank reconciliation statement. Now, the next transaction is checks directly deposited in bank. It means some of the debtors of us have directly deposited these checks in the bank on our behalf in our account, but actually we don't know whether we have received this amount from our debtors, 8,160 rupees directly in our account. So we did not record this 8,160 rupees worth of entry in the cash book. So ultimately cash book has wrongly been reduced, or we can say undercast, in comparison with the passbook. So passbook has wrongly been increased. So ultimately we will have to deduct this amount of rupees 8,160, and one more transaction that is left, interest credited by the bank. It means bank has allowed us interest worth rupees 450. This has already been credited by the bank in our account, but this information we don't know because it has not been sent, suppose. So ultimately we did not record this 450 rupees worth of transaction in our cash book. So our cash book has wrongly been undercast, right? So our cash book has wrongly been reduced and passbook has wrongly been increased. To correct this, we will have to deduct this 450 rupees from this bank reconciliation statement. So this interest credited by the bank has been deducted worth rupees 450. As far as the total 18,450 rupees is concerned, this has to be subtracted from this total balance, and finally we will find here total 15,200 rupees, and this 15,200 rupees which will be the balance as per cash book debit, and debit balance as per cash book which is called always favorable balance. Now students, we will understand here this case number 2. When opening balance is debit, that is overdraft unfavorable balance, we can also say, as per the bank statement or bank passbook. It means it is debit balance, or we can say overdraft balance, or we can also say it is our negative balance. Okay, so we'll discuss this illustration number 2. On 31st December 2009, bank passbook of Taneja and company showed an overdraft of rupees 7,700. So passbook is showing here 7,700 rupees worth of overdraft, that is negative balance. On the basis of the particulars, prepare a bank reconciliation statement. Now point number 1, here it is checks issued before 31st December. All of you know we are preparing this bank reconciliation statement on 31st December 2009. So, checks issued before 31st December 2009 but not yet presented for payment amounted to rupees 3,500. It means some of the creditors, actually we have issued these checks to our creditors in the names of our creditors worth rupees 3,500, but they did not present these checks in the bank. So bank has not withdrawn this 3,500 rupees from our account. Second reason, checks paid into the bank, but a check amounting to rupees 2,600 has not been collected yet. It means we are paying here checks. It means we are depositing checks which must have been received from our debtors. So out of those checks, one check worth rupees 2,600 has been deposited, but it has not been collected so far. So amount has not been deposited by bank in our account. Then third point is interest on loan amounted to rupees 554 directly debited by the bank did not appear in the cash book. Interest on loan 554 directly debited. It means bank is just going to deduct this 554 rupees directly from our passbook because we must have borrowed some amount as a loan from bank. So definitely bank will charge 554 rupees worth of interest. But this interest has been debited directly from our passbook, but this information has not been sent so far. So we don't know whether this amount of 554 has been debited from our account. So ultimately we did not record this 554 rupees worth of interest which is being charged by the bank in the cash book. And the last, rupees 4,800 directly deposited by the customer entered in the passbook but not in the cash book. Here this 4,800 rupees, this amount we are receiving from our debtors, and this amount of rupees 4,800 directly deposited by our debtors in our account, but it has not been recorded in our cash book. So ultimately cash book has wrongly been reduced. Now students will understand here how to prepare this bank reconciliation statement, which is being prepared on 31st December 2009. Under this, first of all, please all of you try to understand what is the meaning of this line. It has already been written over here at the top, that is overdraft as per passbook, that is debit. Passbook, it is not positive balance. It is negative balance because it is debit balance, and also it is called overdraft balance. So overdraft is given according to passbook, which is rupees 7,700. Generally this 7,700 is always shown, this figure is always shown in the bracket, but in this question it is not being shown in the bracket. It means it is being shown positive amount here, but this is not positive. First of all, this should always be taken into consideration as negative amount. So actually this 7,700 rupees, this is the negative balance, this is overdraft from the point of view of this passbook. So passbook is showing this 7,700 rupees worth of overdraft which has been overdrawn by the customer. Then some checks we are just going to add here, like checks issued but not presented for payment. We have issued some checks to our creditors. They have not presented these checks in the account, our account. So what we must have done immediately after issuing these checks to our creditors, we must have already reduced our cash book proportionately, but our passbook has not been reduced by the bank because these checks have not been presented so far. So ultimately our passbook is being increased in comparison with our cash book. So ultimately from the point of view of this passbook, actually passbook is wrongly being increased, so it must be just reduced proportionately, but actually here this amount is being added. Again question arises, why this amount is being added over here? We must deduct this amount of rupees 3,500 because our passbook has wrongly been increased, but actually here this balance is given, and this balance actually, this is our negative balance, and this negative balance, whenever passbook balance or negative balance is being shown over here, so we must show all these things opposite. Opposite means actually these checks which have not been presented for payment, so these checks, so accordingly this check should be actually subtracted, but here it will be added because this balance is given negative balance. That is called unfavorable balance of the passbook. Now, next is directly deposited by the customer. One of the customer is just going to deposit directly rupees 4,800 in our account. So our passbook has wrongly been increased in comparison with our cash book because we did not record this 4,800 rupees in our cash book. Okay, so passbook has wrongly been increased and cash book has wrongly been reduced. So we must deduct this amount from our passbook so that we can just match both the cash book and passbook here. But here this amount is also being added over here. Why? Because this balance is given negative balance. In this case, this item has been added. So total 3,500 and 4,800, total this 8,300 rupees has been added and total 16,000 rupees. So it means right now we can say here total 16,000 rupees is being shown over here, that is positive, because no figure means no sign has been shown over here. So ultimately it will be understood as positive. Now next is checks paid into the bank but not collected. We are just going to deposit some checks in the bank, but unfortunately these checks have not been collected by bank, or this money worth rupees 2,600 has not been credited or collected by the bank in our account. So our account has wrongly been reduced. Which account? That is passbook. And our cash account has been correctly increased because after receiving this check from our one of the debtors, we must have already increased our cash book. Now next is interest on bank loan. Actually this interest on bank loan is being deducted by bank from our account. Here this 554 rupees has been deducted by the bank from our account. So ultimately our account is being shown what this passbook is being showing. Passbook is showing less balance, reduced balance in comparison with our cash book balance. So this amount, both these amount should have been added here, but ultimately all of you know here which balance is given, that is negative balance or overdraft balance. Therefore we are just going to deduct both these amounts and the total makes 3,154. So this 3,154 rupees will be deducted and finally we will get here 12,846 rupees, which is overdraft as per cash book. Because earlier overdraft as per passbook was given over here, and now finally our answer will show overdraft as per cash book. So this is bank reconciliation statement in the case of overdraft balance. Thank you.